All right, let's do some macro. Welcome to QuantBox Live, your global macroeconomic Quant-in-a-Box. Today we're here to uncover the best opportunities fundamentally across all these markets. My name is Wayne McDonald. I'm the founder of QuantBox, but also a Harvard-educated economist. You can try QuantBox for $8. Now, everybody here is already a subscriber, and that's why we're doing this live. If you're watching this recording on YouTube, it's delayed almost 4 hours. So why don't you give us a try? So anyways, let's log into the database. I got to be into the right Gmail to log into the Google Cloud, and we'll pull the real-time data. Oh, you know what? I was supposed to do the disclaimer in that process. Well, actually, I think the easiest way to do that is quantbox.co. Come on, I'm trying to be a good coach, trying to be nice and compliant. There we go. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. There you go. All right, so let's get into the database and see what the world looks like. Once again, what we do when I start, I'm always looking for the outlier. Which ones are working, but you should already be on the ones that are working, and which ones are out of position. So everything to the top left and everything to the bottom right are out of position. So, for example, you can see the Japanese stock market is currently down. This is real-time data. Relative to where it was. Well, this was one of the biggest winners just 2 or 3 or 4 days ago for a long time. And clearly there's something going on here, probably profit taking, right? But check this out. The German stock market is down, not just the Japanese stock market, and the S&P 500 and NASDAQ are all down. So we have something going on in the world here, right? Something going on, something's correlated. Check this out too. Swissy yen down, Euro yen down, CAD yen down, Aussie yen down, Kiwi yen down. There's something going on, and it's all related to these stock markets. So can you see the correlation? All the stock markets seem to be down. All the yen pairs seem to be down. And those are kind of out of position relative to what they used to be. Again, you can start your eyes on the left, the top buys and the top sells. Okay. But this is longer term data. Okay. This is much more, let's say, fundamentally based, right? Because the top buys and top sells, they're going to look at things like seasonality, COT data, retail sentiment, GDP growth, inflation, employment, all that kind of big macro data. So it's longer term. This scatter plot is what's actually just happening. Is the asset up or down? It doesn't look like, but the way that a scatter plot works is it's scoring versus what QuantBox expected based on everything to the left, right? So QuantBox is looking at all that data and ranking and then scoring them relative to other. So they're comparing assets against each other quantitatively. Okay, so you get that positive, positive number or the negative number. What the scatter plot is saying is what is actually happening right now relative to that scoring. Excuse me, my throat's gone today. A lot of people sick around here. I don't know about your neck of the woods, but anyway, so everything over here is, expected to be one of these, and everything up here is expected to be one of these. And so we can see that these are doing what they're supposed to. These are doing what they're supposed to. So what we're really looking at today is these and these. So we're trying to figure out if all the stock markets are down and all the yen pairs down, is that a longer term play or are they dips in an uptrend? See, that's what we're looking for. If you're a bull, so you might be thinking this stuff, but it might be bearish now, and that's what we want. Or you might be a bear, so you want to look at stuff that's bullish right now. You might be able to sell a rally. Okay, so that's the first thing I'm looking for. So if you remember, Bitcoin was way up here, and it was a huge outlier. And now I don't even see it. So it's come back, obviously. All right. So cool. Oh, and look at oil. What explains oil? Not technical analysis. Okay, this explains that about 30 hours ago, a member of the Saudi Arabian oil industry, right? I think it might have been the Minister of Energy. He said at the energy conference going on right now in Qatar that American short sellers of oil are gonna lose. I forget the wording. He used a gambling analogy, and then he realized he's from Saudi Arabia. He's not supposed to gamble, so he's like, "Well, I don't know anything about gambling. I just saw it in a movie once," and everybody laughed. So, anyways, he's like, "If you're a short seller of oil, you're going to lose." What's he hinting at? Saudi Arabia wants and the rest of OPEC want to push oil prices up, and they have a meeting coming up in a couple of weeks. Thread the needle a little further, and everybody's buying oil right now. Boom, boom, boom. And that's why it's way, way, way up. That's fundamental. It's not macroeconomic data, but it is fundamental. All right, so that's what that is. So let's zip over then. What do we want to look at? Do we want to look at EuroCAD? See, like right here, EuroCAD QuantBox is analyzing the macroeconomic data and then scoring Australia versus New Zealand. And the score is -4, but it's up today. Okay, what about this? Euro Kiwi, score of -3, but it's up today. Pound Kiwi, but it's up today. What's going on there? Well, New Zealand raised interest rates, right? I have it here. Here we go. Okay, it was 5.25. Now it's 5.5. But I guess they said something that's spooked the market, because when you look at some of these things, so I'll bring up that cross pair now. But all Kiwi pairs seem to be showing weakness. But look at this, pop, holy smokes! So yes, they raised interest rates. Be honest with you, I haven't read the details yet. So that's on my to-do list today. But clearly they said something like, that's it, maybe no more to come. I don't know, but whatever they raised, which should be bullish for the Kiwi, but the Kiwi fell across the board. This has nothing to do with Aussie. Because remember, pound Kiwi was down, Euro Kiwi was down. They're all down. But somebody must have said something at the press conference in their forward guidance or outlook. So I got to figure out what that is. But we know technically this is just pop, way out of position, where everything else, including that interest rate hike, is favoring the New Zealand dollar, but the New Zealand dollar's weak. So maybe, just maybe, you look for a resumption of this trend. And even QuantBox is still projecting 7 days in advance. So we're at 107.26, but it's saying, look, remember, it's not predicting per se. It's saying if the existing technical trend continues, and the technical trend is lined up with the fundamental trend, that's what the sell is. Okay. And even look at the seasonal trend. If the trend continues, it's not saying it will, but if the trend continues, it's doing the calculations of calculating the slope of this average, and then doing basically a standard deviation analysis. So projecting out 7 days. So it's a linear projection based on the simple calculation that we all love to share with beautiful people. Y equals mx plus b. Okay. And then it's right. So then you from M is the slope. So you calculate the slope, then you calculate the variance, and then you take the square root of the variance and you project this way. Okay, that's all. Simple, easy peasy, lemon squeezy. So if that continues, and right now the trend seems to want to be down, if that resumes today, in a week, maybe we're back down as low as 106. Okay, the best case scenario. So if you want, let's go take a look at that. Okay, Aussie Kiwi, bada bing, bada boom. Let's go into the charts. And holy smokes. Okay. So if you take a look here, you can see sort of what you would expect on the short run here from even just last night. This is daily. Let's go a little smaller time frame. And actually, in the day trading group at FX Bootcamp, we were talking about this. Now, someone posed this actual trade plan, and I think the feedback I was getting is, I'm worried about a bigger pullback. So if you were going to do a trade, you wouldn't do the aggressive trade of, I think the boot campers trade plan, if I remember correctly, had it like this for a down, and I'm like, there's something in there, in particular because of the decision making or the announcement of the interest rate decision, that I would try to like be cautious or cognitive of the volatility that can come from that. Now, the thing is, they raised, and I still would have thought down. And technically, I thought, well, be prepared for a bigger pullback if you were going to do that trade, just because you got that volatility risk. Well, that's the thing about volatility. It's really hard to predict what that actually means. Is it up and down, up and down, up and down volatility? Or is it like, spike volatility? There's different types, right? And I'm like, well, when it comes to news releases, you don't actually know what that is. Sometimes good news is bad news. Sometimes bad news is good news, behaved on depending on behavioral finance. But whatever, my suggestion was wait for at least a bigger pullback. But was I thinking that this giant move based on New Zealand raising interest rates? No, of course not. It does, right? Not quantitatively. Technically, we know this is outside. It's a couple of standard deviations, if you will. And even on this bigger time frame, you can see this is 1 and 2 standard deviations above this mean. You can't quite, I don't have the mean drawn, but the mean is in there. So is the downtrend over? No, not technically. Is the downtrend over fundamentally? No, not at all. So we can see that this is an outlier today, and that's why we looked at the scatter plot. So maybe in the next 24 hours, maybe somewhere in these zones, okay, let me get rid of the mean, okay, maybe somewhere in there you spot a reversal pattern, okay? And if that's the case, then it would, right? It's a mean reversion type strategy that it would head back down into that zone. Okay, so just think of it as a mean reversion. This is an outlier. And if you believe fundamentally and technically we will resume the trend, then let it go up, sell high at resistance, work your way back down, because that's how the math is actually working, right? So work your way back at least to the mean, but more likely to the bottom of the channel, you see? And so that's how you want to use the tool, because QuantBox looked at the increase in interest rates and said that makes sense. The market's reaction is completely the opposite. It doesn't make the quantitative analysis wrong. In fact, QuantBox is like, hey, look, this is unusual and odd. Okay. So somebody probably took some profit, huh? Right. And then other people got stopped out. So, in fact, let's explore that. Can we prove that? Wouldn't that be interesting if we could prove that? Let me go back to QB. Oh man, I have multiple iterations. Okay, let's take a look. Mm, 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 mm. Mhm. No, can't really prove anything. Really, based on the COT data, that pair is 50-50, right? Pound is neutral basically, and Aussie is weak. So you'd get a better setup somewhere else. Okay. So, for example, the other thing that's an outlier, in fact, let's just cover that briefly here. Let's go back to where we started and we say, oh, look at all these things that are out of position, right? Like, right? Aussie Kiwi we just looked at, and then there's Euro Kiwi and Pound Kiwi and stuff. So you might say, okay, which one of these are institutionally set up the best to look? You see, like you could look to sell these back into position because we know they're out of position to the upside. So we know these might go. If it reverts back to the trend, they should be down. See, again, like this score is -3, but it's up almost 2%. Okay. So it's up, but it should be down. So you're like, okay, out of these three, Aussie Kiwi, Euro Kiwi, Pound Kiwi, which one should I focus my energy on? So then you can go to the COT data, the Commitment of Traders report, and you can say which ones are the most extreme. Well, Euro Kiwi is way better than a Pound Kiwi. You see? You're like, because institutional investors are way longer, or you set it up somewhere else. Okay. So, anyways, but nonetheless, we'll leave it at there. So let's take a look at economic news. Oh no, not the news. That's not what I wanted. I wanted the heat map. So what's going on in the world today? So as we could see, as we saw in the scatter plot, which is doing the same thing but just trying to show positioning. Um, Euro Kiwi, Pound Kiwi, oil. Okay, Aussie Kiwi. Okay, obviously Kiwi is the weakest right now, right? Then you have Euro Aussie, Pound Aussie. Okay, so Aussie's fairly weak. Also, Euro up, Euro up. So Euro is neutral to positive today, so that's interesting. Gold flat. Okay, biggest losers. Look at this: Kiwi yen. There's some more yens here. Uh, there we go. Aussie yen, all that kind of stuff. There's all those stock markets. Biggest loser is Bitcoin. And I believe yesterday Bitcoin was way, way, way up on the scatter plot, but out of position for a short. You see? That's why the scatter plot's awesome. So I'm going to create a whole page just for the scatter plot. So if you have trouble seeing the scatter plot. I'm not going to replace this because some of you guys use it. I think I have some ideas where I'd like to get this down so it just shows you the biggest winners and the biggest losers, and we just move on. Like you probably don't care what's in the middle, so it'd be interesting if we just had a sort of a scatter plot and a basic version of this. That's my idea. Because then, if you have the scatter plot, you don't need this technical trend because it'll already do that for you automatically based on statistical analysis, right? So, anyways, but things to point out: if the Japanese stock market and the U.S. stock market, okay, because look at Dow, Nasdaq, S&P 500 are all down between a half a, 0.7%, okay, all the way down to negative 1.26%. Like they're all down. The right, the DAX is down, the FTSE's down. So what happens? Okay, yen gets strong, and typically dollar gets strong. So let's take a look at some of those things. Let's take a look. So I'll pull up my indices. These are the short-term indices. So this is the right here, right now. Yen is strong. Dollar is strong. Kiwi's getting crushed. We know that. But let's put this in a bigger context. Let's look at the same. Okay. Again, these are indices. So this is like Kiwi versus everything. What you want to do, and on a daily basis, okay, we might want to say, well, okay, you add that. Did I do that one? Okay, there we go. That could be the direction we're going on Kiwi, but right? But it's interesting that Kiwi was so ripper strong for what, a few weeks, just boom, ripper strong. So I guess buy the rumor, sell the news kind of thing now that they've raised interest rates. So I really need to go through what they said at that meeting to create that bearishness, or it was always bearish. That's probably the thing, because when you're looking at a chart, it's tricky. It doesn't actually tell you how people are positioned. For example, when it comes to the US dollar, you get periods in which investors around the world are buying US dollar to, let's say, to buy US treasuries. And it gets really, 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 really strong. Now, if they just decide to get out of the trade, they get out of the trade. Great. So they're out of the trade. Well, it shows US dollar weakness, but is anyone actually selling it? Well, the physical process of exiting a position you hold is you have to sell it, right? Like you get out of it, you sell it. But are they active short sellers? Are they actively short selling the US dollar? No, they're just exited their long position. But a chart doesn't distinguish between that. It just shows euro dollar going up. So you might be thinking, oh, people are buying euro dollar. Look, euro dollar is going up and up and up and up and up. But in reality, people are just exiting dollar long positions. They might be long euro dollar, but they might be, or in that case, short euro dollar, but they might be short a whole bunch of other things, so you don't get that kind of clarity. So this big rally may not be people actually buying New Zealand dollar. Okay. May not be. So we'll have to watch the positionings and stuff like that. That in QuantBox will show you. All right. So longer term, yen is still in a downtrend. Dollar is bouncing up off of its support, which is really good because that's what I want to see. In particular, going into the third quarter. Third quarter? Yeah. In particular, going into the third quarter, I really want this to be up. Okay. I have this measured just to show you how big that bounce is. So we're approaching a 618. It's not really a trade setup. It's more of just a measurement. All right. So dollar should be up and is up, and that's great. So let's go take a look at some of those dollar pairs. Okay. And bum, 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 bum. We have just hit target. This is the projected low for the month of May. Let's delete this out. Okay. So 24 days ago, actually more than that, but at a bare minimum, 24 days ago, that price was set in stone as the conservative target for the month of May, and we've now hit it. And for the last 45 minutes, have not been able to go 1 pip lower. You're like, whoa, dude, whoa. I mean, it went down, 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 stop. Cool. Right on. So can you expect more? Well, has anything fundamentally changed for the euro dollar? No. But is that technically important and relevant? Yep. So if let's say the fundamentals, okay, fundies, oh, that's terrible. Sorry. Fundies. Same. Okay, risk. Okay, so Fundies, same. Risk has gone up. So if you're going to use technical analysis, you could do things like you can just get out. Okay. Or you move your stop. Okay. So like if I move my stop, that's, look, see, this is a terrible way of doing it, but okay, that's 50 pips profit for me on that trade. Now, I don't like to do that. I'm not going to do that, but I'm just showing you because of the technical analysis, you should be able to read this chart and know that, yeah, nothing fundamentally has changed, but technically your risk has gone up and you should do something about managing that risk. Okay. The extreme target for the month, the aggressive target is over there. So you can put a limit here. So now I've moved my stop and I've added a limit at the extreme target. That's one way of doing it. Or you just take your money and run. Just take it, whatever. Okay. Now, we had similar decisions yesterday. Let's do this one. Let's do Aussie dollar. Okay. This is one of the setups from yesterday. And where's my trade? Okay. One of the things that we had talked about is that if you're conservative, you put your limit right here. So I did. I'm out. So I was in, if you remember, I was in here. Let me get this drawing tool out of the way. I can't see the number. Oh, it won't let me move it. And there we go. Whoa, nope. Wow, it's glitching. All right. So, it's funny. I don't know if you can see this. I can't get the drawing tool out of the way. Classic move. They updated their software, and now there's a glitch that's never existed. It won't let me drag it to the other window. All right, there we go. All right, let's try again. So I was in there. I think it was 66 and a half, and got out. It looks like 65 and a half. Hundo Pete. Okay. Has anything fundamentally changed? No. Okay. This just happened to be a trade plan from a week ago, expecting a fast move down and then a pop. But comparing and contrasting to the other currency pair that we have, we are nowhere near the monthly target. Okay. We are in the weekly target. Okay. So again, your risk is increasing for a quite reasonable pullback before we hit the monthly target next week is, let's say, probable, the most probable, or the dollar just is ripper strong today. US dollars ripper strong today, and we're going to hit down and then get a likely pullback. They're not entries that I'm talking about. What I'm talking about is your risk is increasing. So quantitatively speaking, this is not a big shocker, right? I don't think. See, I only have a human brain. That's all right. Okay, so let's go into here. Okay, so we know this is a hard sell, right? This is very, very, very bearish, quantitatively speaking. It makes a ton of sense to be short this. And maybe that's why this one's working better than the other pairs, because it makes the most amount of sense. But along the way, like technically this is reading a daily chart, and it's using my moving averages, like the 2155, for example, and it's taking all of that data and then projecting it 7 days in advance. So it's saying, hey, this could hit as low as 64.11, most likely around 65, right? Okay, somewhere between 64 and 65, just based on linear projections. So it's essentially doing this for you. So if the slope of the mean is there, you can see if you go out 7 days, guess what? It's going to do one of these, the pink or the black scenarios. See, I'm just doing the calculations in my brain, which is nice. But nonetheless, as you get closer and closer to these targets, your risk of it failing increases, right? Especially if everyone gets out of the other trades, there's going to be an upward movement, at least on the short run. But on the long run, this is right as rain. Okay. So once again, look at all the stock markets. There might be something going on there. They're out of position. All the yen pairs are down. They're also out of position. We as technicians and as economists now and as investors, we have to make a decision. Are those dips or has a reversal begun? And the only way to answer that is use your chart. Okay. If they occur after things like double tops or a head and shoulders pattern, you need to really be risk averse. And if you're sitting on profit, lock that profit in because your risk is increased. If you look at those and you don't see reversal patterns, then we don't know when, but the probability of trend continuing is quite high. So maybe later today, maybe next week, maybe next month, the trend continues, because remember, the long-term trends are always based on the fundamental analysis of macroeconomic data. What does that mean? There are humans behind the nature of these moves. It's really, truly money being deployed for logical, intelligent reasons. They're not trading. They're not traders. 99% of people, probably even higher than that. You're right. The currency markets in particular are about business activity, not speculative trading, right? So eventually the rationale of the economics resumes, or let's say the price action matches the capital flows, and that's what we're looking for. So have a wonderful day. I will get this video up ASAP. And if you're watching on YouTube, hey, we did this 3 or 4 hours ago. Why don't you join QuantBox.co? Try it, man. It's $8. Thank you, team. Have a wonderful day.